What is up? Let me say what's up to everybody. Is it lunch hour? Happy lunch hour. If you guys are on Twitter, I can't actually see the comments. I know I saw it was like a later stream, but I won't really be able to see that going on. I know there's a couple of people out there, so appreciate you guys. Sexy Steph cousin. I love it. Market so far looks a little upski, but starting to taper off. So I think still probably chilling. I don't think this is. I hope we don't like interrupt some like epic trades. That's not the intention, but it's always possible. Sorry, I'm looking off to the right. I got a couple screens I'm watching right now. But yeah, I think every Monday, if you're new, I don't trade Mondays very much, really at all. I think there's the market gets a case of the Mondays. Sometimes I'll get a case of the Mondays, but in general, statistically speaking, not my best trading day. So I usually take this time to kind of go over what the setups are for the week, any type of major economic data that I'm looking at, what happened last weekend or over the week that I want to review, and then kind of review what do we have on deck for the rest of this week and plan out the rest of our trades and more or less the entire week as a whole. So the approach, if you're new, again, is very similar to just like any other business meeting. So Mondays, if you're in the corporate world, I always had that big all hands Monday meeting, Monday morning meeting. This is the equivalent for me in the stock world, and usually about this time we either get a reversal, but about now is when the market tends to die down. People are kind of taking a step back, had your lunch, and really just kind of digesting what's happened so far. I have a couple trades on, so I'm just monitoring a couple screens. Most of my stuff is going to be weekly, weekly trades. So usually looking Monday, very light initial kind of like put my toe in the water. Into Tuesday, I'm a little bit heavier positioned. Wednesday, Thursday, I'm full. Tuesday PM and Wednesday, I'm pretty much fully positioned, taking everything mostly down by Thursday at the end of the day. And Friday is just for profits, really. So don't trade Friday if you don't have profits from the rest of the week. That's my warning. But yeah, last Friday was an amazing Friday. I think we probably one of the best Friday sessions I've had in a long time. So super. You have a habit of killing it on Fridays. Yes, I really do. Matt is spot on. So Fridays tend to be my best days in terms of percentage gains. I won't say dollar gains because that's a different thing, but in terms of percentage gains, yes, they do. They like some of my stuff looks absolutely ridiculous, maybe unreal sometimes. And it's because my thing is volatility. So again, having studied options for the last, I don't even know how long, the one thing that I really focused on was the pricing model and understanding how options are priced, finding out when they're underpriced or overpriced, which actually brings us to earnings season, which we kick off. That said, every time earnings season comes around, without fail, the market is pretty choppy. So I wouldn't get super excited. Yeah, live on Edge. I'm going to put Miss Cleo to the test, you guys. This week, I mean, I've been watching this thing for like a solid 6 months, and I swear to God, I've never seen anything like this. It freaking blows my mind. But I'm going to show you like legit. I pulled out, her little, tarot reading, but yeah, day by day, what she's saying and how it's going to play out. We're going to see it. But again, I don't really want to put them on blast, but it's not my thing. But yeah, Matt, it's am I Vietnamese? No. Needy, I am not. I'm Hapa, half Japanese, half white, German, some mix of something like World War II. My bad. All right, guys. So I'm gonna get into this really quick. And so this is really how we do it. I'm gonna pull the chat down. It's still out there, so if we have anything that pops up, I'll bring it up. We're getting a little bit of pop. Really, again, not really worried about it. Market opened pretty much right into resistance this morning and proceeded to kind of like follow through just a little bit but I didn't, we have a lot on deck. So what I would say is when we go over this stuff, it's going to be kind of hard for the market, in my mind, to really be like a face ripping type of rally with some of the data points that we got last week. And again, we've had a huge couple weeks of trade in terms of like general market moves. We moved the more than the course of an average week's range pretty quickly last week, and actually proceeded to retrace all of it just to end near flat, actually. So, I don't think that this is going to be that much different. So in the meantime, yeah, maybe you get some day trades. It's all good. I have some short trades on. I might get burned a little bit, but I'm really not worried about it. Again, super light. So, anyways, so the housing. So one of the major headlines last week: housing industry, generally speaking, urged Powell to stop raising interest rates for risk of a hard landing. And I think there's a lot of stuff on it on CNBC this morning, but it's mostly like a generational thing. So like I'm a millennial, probably an older millennial, but my generation is one that's probably getting burnt the most right now. So like if you don't have a house to sell, it's a really hard market to enter at this point, right? Especially with rates incredibly high, no sign of those coming down anytime soon, at least not in the mortgage industry. And like prices, supply is still low, so prices are still staying high. It's very, very low supply. um it's still technically, I guess it would be a seller's market just because of the supply, right? I'm not a real estate guy, so I don't really know. But I know that it's crazy hard, right? Like it's crazy hard. I feel for everybody looking for kind of like that first time home. Yeah, it's not a fun scenario to be in, for sure. And then I think it was last week, somewhere in the middle of the week, Paul Tudor Jones, big time investor, came on CNBC, and he's made a handful of really amazing calls, but this is like the billionaire type mentality. And his thought was, or his statement was, really, it's really hard to get excited about stocks or equity market. And even if you hear a lot of the analysts in general on TV, and I know this is like talking heads type of analysts, there's a lot of them, a lot of views. So take it with a grain of salt. They're like, yeah, I think the equity market can bounce, but to where it's kind of tough. What's true is that we did lock in another lower high, and we've pulled back just a little bit to retest that prior breakout level. And so, do I think that we're going to just rocket ship off of that? Hard to say, right? It would be a stretch. It would be a stretch for sure. Plus geopolitical tensions. U.S. is not in a great fiscal position. Those were his two arguments. Yes, the debt debt is mounting, deficit is growing, and a couple other headlines. You guys know I've been long this stupid Pfizer stock for so long. Probably the worst investment I've made in a very long time. But man, I was shocked today. Shocked today. So Friday after the close, they announced basically a $9 billion guide down for the full fiscal year, which is just unheard of, right? And it came from like a government return of Plaxavid. And I'm thinking, all right, that's it. I mean, when you're looking at investing, this is not trading, by the way. So when you're looking at investments, especially from a value perspective, my personal sentiment is it's got to be, a lot of it depends on the leadership team, right? Because you can get caught in some serious value traps. And like, for example, Citigroup has been a value trap, one of the biggest for, I mean, as far as I can remember. Pfizer has been one all year. I have another one, Warner Brothers Discovery, probably a value trap, possibly a value trap. Like there's all these reasons why the stocks are undervalued right now. But at the end of the day, it's really going to come down to just like that leadership vision. One value story that we did get was like GE at the lows, October, November last year, which has been an amazing run for that one. But when I think back about it, it's really it was about that turnaround story. So does Pfizer have? Then this is the one X factor that Pfizer was always missing, still missing. They don't have that X factor, right? So like GE, Larry Culp coming in, financial genius, had about a year to work his magic, and then it finally paid off probably like a year and a half, 2 years after he joined. And in that 2-year time frame, it was a lot of basing. So truth be told, Pfizer here now, I'm not I'm not in love with it anymore. And it's mostly because like that leadership, right? Like how do you miss $8 billion? Like how do you have to guide down, basically cut your guidance in half? I mean, seemingly out of nowhere. Like I didn't see that coming. They should have seen that coming. That's pretty disappointing. So I got to decide what to do with it. I didn't get completely crushed. I'm pretty close to break even here. Um, I think I might start trimming pretty soon because yeah, I lost a lot of faith in the leadership there. Anyways, that's just me. Sorry, TMI. There was another one. So Bitcoin, huge rally this morning on the headlines of an ETF approval. Fake news, surprise. So that's not actually going down. Their BlackRock application is still under review, so it's not been approved. And then on the 18th, we have S&P 500 rebalancing where Lulu and I almost thought this was HubSpot. It's not HubSpot, but HUBB is going to replace Activision and OGN. So just a heads up on that. So moving into the actual data. And we can get into this, I guess, a couple questions. So housing, low inventory, prices exactly, rates up, buyers are really disappointed. Yeah, Frank, this is a huge, right? Like, oh, it's Frank. What's up, man? Yeah, low inventory, you know, I think of like Fastenal last week, who had a 7%, move up to the upside. Fastenal, if you don't know, is like one of the staples, and they make like the screws and nails and stuff like that. So like, if you want to see what's home buyers like, if they're doing really good, XHB is the home builder ETF. Been pretty beaten down. Fastenal is like that one staple. I don't see any bounces. Home builders usually actually lead like a recovery out. So I would expect to see home builders really start bouncing first if we are going to have that kind of move. Right now, they're not. They're hanging out towards the lows, recent lows, at least sub 80. So around 75. I don't see anything major coming from them. So if I do see movement there, that would be a cue. I don't necessarily trade them specifically, but that could be a cue. And I talked about PPI and CPI last at the beginning of the hour, top of the hour. So PPI, if you're not familiar, is producer price index. So that is what like the manufacturer's inflation is. And the question is, are they going to pass that inflation down to the consumer? Yes or no, right? And when we look at these data points, what's most important to note, and especially when we're getting into earnings season, you're going to see this. This is correlation for you. What does not matter is how the current number comes in compared to the prior number. That does not matter like at all. So if you're looking at specifically for your companies as they come to report earnings, like, yeah, somebody might beat and raise, but that doesn't matter. That's not going to influence price whatsoever. So what matters is the consensus number or the street number or the whisper number if it's an earnings event. And so what that is, that represents what the market is currently pricing in today. Right now, what is the market priced at? And so coming into Wednesday, the market was priced at a 0.3% higher PPI month over month number. And for us to come in at a 1.6% PPI year over year for September numbers. So when we did not get that, the market did have a reaction, right? And so that's what we're talking about. It doesn't matter that it's not that far away from the prior number. It matters what we're coming in at versus consensus. And it's going to be the same thing for your, earnings. So when you see someone have a double beat and the price sells off, it's going to be because the street or the whisper number was higher than what their actual numbers were, not because it was a double beat or not. It's because how far off it was from the consensus, really. And that in general is how markets are all priced all the time. So again, don't worry about what the priors were. Always find out what the consensus is in general. CPI or core inflation. So that's consumer price inflation. So core inflation rate, that actually came in just about in line for the headline. So I say headline. So there's two numbers. There's what's called the headline for PPI and CPI. And then there's something called the core. So core does not include food and energy. Like we don't have to eat food or use energy. The Fed says it's because they're volatile. I think it's probably one of the stupidest things that they do. And now they have, by the way, this new super core that doesn't include rent. So if you don't have to eat, you don't have to go anywhere, use any utilities or gas, and you don't have to pay for a place to rent, then you can look at this super core. But in reality, it's whatever, right? Like it is what it is. It sucks. So anyways, that said, so the actual core inflation CPI came in pretty much in line with expectations. This was Thursday, but Thursday was a big move. Thursday was a huge market mover. And there's one thing I'm pointing out right now that we don't usually look at. It is a thing. And it's, this market has been all about inflation and bonds and the dollar and rates. And the one event that kicked this whole deal off was a 30-year bond auction last week. And so what I'm going to do really quick. Oh, hello, Spy. I told you guys I didn't think it was going to last. My bad. Who knew? We knew. Oh my God, you guys. I'm just going to give you a preview. Miss Cleo said that it would be an early rally to be faded and we'd probably close red. If she's right, I'm going to freak out. I can't believe that. Anyways, I'm going to go back. So this is Friday, Thursday. So Thursday in the pre-market, that was our high for the week. And I'm looking at a 1-minute chart. So let me take this down to be a little bit more realistic for you guys. What I want to do is we're going to look here. So we use NFP levels, non-farm payroll levels, in terms of what fundamental events am I looking at that create my technical levels. One thing stands true to me: fundamental events create technical levels. Just like, technicals tell you when to buy. A good friend, Exclusive, shout out to you, man, if you're out there. X says fundamentals tell you what to buy. Technicals tell you when to buy. Very similar, right? Tying it one more time together. Fundamental events create your technical levels. And that is 100% true. This is, you guys can back test this your own. If you've been around following me at all, then you know these are 100% back tested. And so what happened in the pre-market? Guess what? We priced back to this. This is July, NFP, high and low, right? The high of the day, the low of the day. That's all I'm doing. That's how you get your levels, right? This fundamental event created these technical levels, this technical range. And so when we got to the open, the market's like, well, should we be higher or lower than July of last year? Well, the market didn't think we should be higher. And then something else happened. So this is a 10 o'clock Pacific. And I'm going to come to our calendar here. So this is the actual economic calendar. And this is, it was such a huge event previous week that I think it really needs to be noted, right? So we had two things. So 10 o'clock Pacific, we get a 10-year note auction. This is Wednesday. Wednesday the what? This is the 11th. I think we're talking about Thursday. Thursday, we got the long bond, 30-year bond auction. There was no other economic data after Thursday, 10 a.m. This is Pacific, 10 a.m. Pacific to the minute right here. This is boom. That's the beginning of the hourly candle. What happens? There's like a no bid. And this was like all the news, right? Like one of the biggest, like the worst looking auctions in a really long time. This is important, you guys. So like, we have another one coming in today. And that moment when the auction went live and I got all this, I just heard it was just like a D for the auction result. But, it just basically goes to show, look, if the bond, and we can look at TLT. So TLT did not have that type of reaction, by the way. I think it was here, right? It was already going down, but this is a 20-year bond. What happens, 20-year plus bond, what happens is, like, if there's no bid, essentially nobody wants to buy them. So they have to go, so the price of the bond goes lower. Remember, we did that thing, before. We're like, okay, so if a piece of paper, this is my bond, right? Whatever, it's a 10-year, whatever it is. And it gives me, call it 5% yield. Something like that, right? Can you see it? So 10-year, 5%. But the piece of paper, right, costs me, I don't know, $100. So the price of this paper is $100. It's a 10-year bond that yields 5%. I still have to buy the paper, right? So nobody wants to buy it. The price of the paper goes down. When the price of the paper goes down, guess what? The interest rates actually go higher. It's inverse correlation. And we have another one later today. Or not today, later this week. Wow, what a sell off, you guys. Amazing. Who would have thought? Couldn't tell you. So we do have a couple of things, but this was the one event that actually basically gave us the signal for the rest of the week. That was the high. We opened in the pre-market at the high of the week, and then again, this is an average week's range. Guess what? So this was Monday here. So Monday at the open, which would have been right there. This is an average week's range. This orange box. I'm going to take this red one down. But this orange box, that's an average week's range. And yes, we usually stay right in it, right? So that said, what happens now? Where are we? So if we take the high of today's high and average week's range, brings us back down to 428, which to me is going to be a pretty key level. So this day here, October 6th, this is our NFP for this month. We've tested the high fundamental level once, twice, bounced off of it in the pre-market. This is how key these are, right? We did create a session gap today over the weekend. So just a heads up, there is a session gap 430. I got a sneaky suspicion that we actually do tend to like fill this. There's this fair value gap here that I've had my eye on all week last week and still, right? So this is what we call fair value gap or low volume pocket, where the market really didn't have a chance to fill in or decipher what fair value was. That's where that name comes from. What fair value was inside of this range. So this brings us just about to 425. Technically, it goes down all the way to like 422 and tests this bottom, right? And so what we're looking at, I'm just going to go back to my staple 30-minute chart. That's going to test this supply zone right here. So personally, I'm still fairly bullish. Unless we're below last Friday's or the 6th, October 6th low of 419.79, I don't think that we're I'm not thinking super short in general. Right now, look, we hit our upside target. Right now, I'm thinking retracement, right? Number 1 to 430. That's going to be Friday's low. And then if we break below that, then yeah, I think we do get to this 428. And I really do think that we fill in that low volume pocket. And the real levels that I'm looking at, I'm still looking, this was a key order block, right? So all right here, this line, this is going to be like your line in the sand to me. Let's do it right here. We'll just make it like clean, flat line, right? That's the bull defense, right? So the defensive zone of the bulls, right? The bears can try to push it back into here, but I think they defend. And I really do think they defend. So if I get a shot down here, this is probably where I'd be looking for a bounce. But look, hey, if we don't hold this line, right, like this 425, it's not looking good. I just got to say. So we're 50% of Friday's range. At that point, it would have to be a pretty quick bounce. This would be a 618 retrace of Friday's session. If we're below 423, and it would be a quick, right? Like it's just not looking good. And absolutely below 420, we are just short. And I mean, just short. But does that come into play this week? Probably not that far. Because again, we're going week to week. This orange box, that is an average week's range from the high today. If we take it from the open here, that actually does get me right into that like sweet spot that I was looking for, right around 424, 425. So like I said, if I get a shot down here, I like it. And if it doesn't hold, that's going to be rough, at least in the short term. That said, if we do take it from the full open today, an average week's range would actually take us all the way up to 442. Fill this fair value. That's July NFP high. That is again a fundamental event creating technical level for me, and the way I trade. I like that. Possibly to the upside, all the way up there. I just want to make sure this isn't. No, that's an all-time high. Anchor VWAP. I can take that off. Let's get a little wonky. But for now, we're kind of chopping. Cool. So where were we? All right. So we went through CPI, we went through PPI. The CPI came in pretty much in line, right where everybody expected, 0.3, 4.1, 0.3, 0.36. So this is all this CPI is in line. It's a question of PPI, producer inflation. Do they pass that on to the consumer? And that's what the market tends to assume, but we'll see. Right. And we will see very soon because we have earnings coming up. And then we have a bond auction too. So let me just get into this. So Wednesday, and this is for this week. I skipped ahead a couple slides. So today, nothing burger in terms of economic data. Tuesday, we do have retail sales. Doesn't tend to be a big market moving event. If retail sales are high, though, this goes into that consumer expenditure. If retail sales are high, it's not so good for it's just not so good for inflation. And then Wednesday we actually get these two big things. So nobody's really going to talk about it on your economic calendars. This thing called the beige book is not going to be one of those important data points, but I'm going to tell you right now, it absolutely is. Right. So the beige book, what the beige book is, if you're not familiar, that's actually a report that gets turned in by the Fed presidents. I don't remember how many there are, but that's actually what they decide. That report is what helps them make their decision of whether or not they're going to raise rates or keep or do whatever, what they're going to decide on in terms of rates. And I think we do get a preview at that, but it's essentially every Fed president kind of turns in their report for their area, and then Jay Powell gets to take a look at it. Everybody watches it, and then we're going to get a 20-year bond auction right after that, which could be a very significant market moving event. Just saying, if it's anything close to the 30-year bond auction, be careful Wednesday. And then Thursday, we get jobless claims. And swear to God, I thought we were in the free and clear. I thought Powell was done, but nope. He's on the calendar one more time for a speech on Thursday. By the way, all week long, we have a ton of Fed speeches. Friday is really nothing, but just more Fed speeches. We do get oil rig counts. It's kind of a nothing burger. But again, beige book Wednesday, 20-year bond auction. If it's anything like last week's, it's going to be a big deal. And jobless claims, Powell speech on Thursday. So be ready for some crazy swings intra week. And yeah, that's what it's looking for so far. So plan your weeks accordingly. That said, we do have earnings coming out this week. And again, if the data holds true, 10 earnings seasons tend to be very choppy weeks in the market. That would be this week, most choppy next week. We've had 3 components of the Dow 30. So I track the Dow 30. That's 30 components in the Dow index. And if you see, they're not that bad in terms of earnings. This is Q4. This last Q4 is when they were thinking, oh, earnings recession, blah, blah, blah. And it didn't look that great. And they were still talking earnings recession come Q1 reports, but we're tracking this and I'm looking at it. Doesn't look that bad. So I think the earnings are still going to be good, which is why we're going to have this push and pull between the bulls and the bears, right? So expect some chop. Here's the calendar for you if you're looking at it. I think we had Schwab so far. What I'm going to tell you, and in terms of my group, is that anything that's on this calendar right now, I'm not trading this week. I'm just not going to trade. I'm not going to trade Tesla. You will not see me take a trade on Tesla. You will not see me take a trade on Netflix. I don't care what the move looks like. I'm just going to tell you right now that the risk to reward in terms of option pricing, not price action, but the way the options are priced, it's going to be pretty crap. You might get a great price act, like great movement in the stock, but you'll look at your gains and it's going to be fleeting, short-lived, and not what you would have normally expected to see. That said, a lot of people like what they've been calling on FinTwit or X. I don't know. They're calling it like the IV flush play. It's not the right terminology, but that's what people use. But anyways, yes, what's true is that about 80% of that implied moves comes off, boom, out of the gate, right? Like in the first 30 minutes, you're like, boom, IV is basically crushed. The way we trade it is that we know that ahead of time, and I'll actually measure who's overpriced, who's underpriced, and I'm likely selling options, short-term options, hedging them with longer dated options, if that makes sense, calendar spreads. So I will have a handful of those. And one thing to note is that as as earnings move on, each sector kind of reports in little groups. So you see the financials going first, right? We had Schwab today. We're going to have the money center banks like Goldman. I don't see Morgan Stanley on here. Morgan Stanley, oh yeah, Wednesday is usually one of the later ones to report. And then you get into the regional, so you KeyBank, things like that. And that's their whole group. By the end of this week, pretty much all the financials have been gone. Netflix is the first quote unquote tech stock to go, but I think it's next week or the end of this month, we're actually going to get like Nvidia, things like that. So right now, expect that companies that are reporting towards the end of the month to make a pre-earnings move. So think like Nvidia, some of the semis, things like that. I will expect to see some of those pre-earnings move. I'm going to trade short term. I don't want to play with this earnings IV. You can't just buy a call and buy a put and expect to make money because the IV goes up. That's not how it works. With higher implied volatility comes higher decay. So it doesn't actually hold. But that said, if you look at this, right, and if let's say tomorrow morning, let's say J&J has a crazy move and starts to reverse it, you can take a reversal trade on some of these intraday in the morning, right? For some quick returns that do actually end up being pretty good. Like if you catch it once the volatility has come down significantly, or maybe even a little bit more than it needed to, and then you catch a sharp reversal, look for those, right? So, I mean, maybe J&J, LMT, I don't trade. It's got a crazy spread on it. But Tesla, Netflix, definitely, definitely Tesla, Netflix are tradable like that. That's for the most part what I'm seeing right now. But a lot of these, I'll just tell you right now, just looking at them, they don't tend to move that much. So, you guys ready? Well, is that well? Hello. All right. What I would say is, okay, you guys ready? We're gonna get into this. Let's test Miss Cleo real quick. Then I'm gonna get into some charts quickly. So I said we're gonna put her to the test. Here's like the full, like not the full breakdown, but this is a lot of it, right? And I put a little summary of what she's saying. I just don't. We're gonna put it all out there. And holy crap, right? We'll see, right? So I'm just gonna read this really quick. It's like this tarot card reading. It's funny, but not funny, but like holy shit, just kind of crazy accurate. I don't know how. But so the first is like, this is the theme card, or this is the whole reading, right? So it's like the theme of the week, right? So they call it a sun theme week, whatever. Let's see. So as for the sun, it shines a light in the darkness to keep the bad things at bay. It brings hope and positivity, bathing us in its light. Sometimes this can lead to brashness and ego, which results in a fall. But most of the time, it helps recover from a bad situation. And I thought it was funny because this was the same thing as last week. And it's like, okay, we achieved both last week, right? Fell, pop, fall, and then recover. Basically the same thing this week, and we're actually setting up for exactly that. Recover from a bad situation, got a little ahead of yourself, and required yet another fall from grace. Same reading essentially from a theme perspective this week. She's saying literally today, illusionary gains. It says tomorrow's supposed to have a chop, and then Wednesday it's a pivot, likely short pivot. Interesting because that comes into that beige book report and the 20-year auction for Thursday. And Thursday is like a kind of capitulation type read. And then Friday, she's saying trend day. So we shall see. Generally speaking, it has the habit of setting up for a great short, but it doesn't always manifest the same day. I think likely scenario overall is that that every rally is faded by the sun and there is no disaster while the sun is shining. So choppy week, right? It will probably be flat to positive week, though the journey may be a little difficult to navigate. Anyways, look for a rally that may even feel euphoric, like this morning, then sell and be ready to watch the fade late Friday or early next week, Monday. Interesting. So recap, quite the winding road. Monday riches. Here's the recap. Monday riches fade into Tuesday protection, which is usually chop, right? Wednesday is a pivot day. Thursday rest, maybe capitulation. Friday is rally. I'm not reading rally as positive. I'm reading Friday as trend day. So whatever it is, probably going to be a trend day. and likely a trend day. Looks like Wednesday, she's saying. So we'll put her to the test, see how she does. All right, guys. Let's get into the charts real quick. All right, so we did this. SPX did flushed. Yeah, flush, but again, this is choppy. So we are not going up right now. I'm just going to take these 30-minute candles. So that's a crazy outside candle right now, just from a 30-minute perspective. I would just like sit on my hands. You're going to get a read pretty soon. But again, we went through this range. So upside, if we do continue all the way upside to the week, that's going to bring us to about 442.46. Max upside profit target lines up with a fair value gap here from late September, the 20th. Also one of my fundamental levels, 442.64. And that range would come to effect. I would trade towards that if and only if we're over that 438.30. That should actually be a pretty quick fill between this level here. So if we do get a press pretty heavily over 438.17, 438.30, that is going to be where we failed on Thursday. If we crack that, then yeah, we should make a quick trip straight to 442 and change. But I don't want to trade towards that until we're making that move. Other than that, this is kind of like caution for the for a bull. Just you should know that the bears are probably going to be stepping in somewhere around here. If we take full downside range, we did this already on SPY, brings us to that 440, 425, 424 level. I like that level to enter longs. That would be a really nice lower high. But so far, as long as we're over 430, I'm just kind of looking for a chop inside that this current range between 430 and 438. So you could be like range bound. A couple guys asked for IWM. Sorry, I had TNA up here for Predictus Graham. IWM has been in a very tight range. So technically this entire orange box, that is a average weekly range for IWM. We've been doing pretty small moves. So this should be probably coming back in pretty soon. But that said, I got two levels. So 175, right? You got like this double. So October's NFP read right here. So if we're over 17, I'm going to call it 174.50 just to be safe. We should, that's going to be a major level. That should actually fill if we can actually get this break, this whole thing pretty quickly. For now, you're definitely going to fill this very quickly up to 176. I'm not going to think higher until we get over that because we do have this very, very large fair value to fill from IWM's perspective here. That should be a pretty quick fill, but that doesn't start until 178.50. So that would be an entire week's range for IWM. If we expect a chop week, though, what I'd say is usually it's best to kind of take half of an average week's range, slap it right in the middle, and that would really take us like to 178-ish level on IWM. Let's do that really quick on SPY too. It's not a bad idea. So half an average week's range. If it is super choppy, I mean, that would just put us right to that 438, give or take, and then down testing that 428, 429 level, which was that prior breakout right in here. So hopefully it doesn't come to that. That would be lame. So here's the Qs. I had a couple of people asking about the Qs. I do have, what is this fib from? This looks like an old fib. So this is a fib from this high, swing low. We're sitting at a 618 retracement as we speak from this swing high to swing low. I don't need this anymore. Let's say if you're here. Yeah, you're just about it. But again, basically dealing with this 370 level, another fundamental level right in here. This is pretty heavy overhead supply. All of this right here. So in terms of the Qs, look, if we're trending over 370, yeah, it's bullish, right? But here's from a technical perspective, and this is a bit far out. So here's this current down or uptrend right here. So from this low, this is January, this is March. We've broken this trend, and you know me, right? Like we don't like to go long on the first break of these type of trends. I like to go take the reversal, which is reversal on a retest of that trend. So retest would be here, but we're kind of in a retest right now too. So if there's bears out there and you're a bull, you want to be aware, hey, look, this is where they're likely to step in. I want to be pretty cautious in general. I'm right at a pretty heavy fib retracement level. And in general, like I have a lot of overhead supply. So I want to be cautious if I'm bullish, and I'd probably be able to just chill and wait for that this level to be either completely reclaimed, and then we head straight to that 377, or just hang out for a bit, right? If it's chop, this takes us back to this half range, takes us back to that 360 level, which we've been battling with. But 370, man, it's such a huge area up here that like I don't really want to get super excited unless I see it with some conviction. And this price action is not a lot of conviction. And again, it's Monday, so I take everything on Monday with a grain of salt. If we did take a full average week's range from the open, that would take us to 381 on the Qs. We'll see. And then if we take it to the downside from the open, that takes us to, I don't see us getting to 350. It does take us all the way down to 352 on the Qs. So this is a much tighter range than SPY is right now. Again, halfway point, if we just smack it right in the middle, 360 to the downside, 375 to the upside, would be a half week's range. All right. So that said, to have a really clean trend, I want to have, pretty much all of my major indices matching the trend. And unfortunately I don't, right? Like that's the problem. There's a lot of worry on the Qs overhead supply. The one that does look the best right now in terms of like possibly going higher is diamonds, believe it or not. And again, so this is average exchange, but the diamonds look way better than anything else, right? So this is Friday's high. The diamonds are over that. That's what I'm looking at, right? Qs are not. SPY is not. IWM is. So IWM and DIA look much better, much more constructive today at the moment than the Qs and SPY right now. So what does it tell me? Tells me that I'm short Boeing and I probably need to be a little bit cautious. Boeing's gone nowhere so far, so I'm okay for now. So if you're short like industrials, maybe be a little bit more cautious. If you're a permable, maybe look in these spots for some of your upside trades and give it a bit of time on the others. So other things to note. So Dixie DXY dollar index. I think we're pretty much max correlation in terms of this right here. I don't know that this does not always stay correlated. But I would just, be cautious here. If the dollar comes down, that's going to be ideal. But the dollar, when I say dollar comes down, that means the dollar is going to need to get way below 105, which, had a huge move. This is all that kind of like geopolitical risk too. And one of the biggest correlations was gold, right? So normally gold, this is gold futures. This had a huge day the other day. Normally this is inverse to the dollar. And here's the same day. Both gold and the dollar were rallying at the same time. So to me, that screams risk off, if you will. So at that point, it's like, I want to be, again, more cautious towards the Qs and SPY. Can they base for a bit? Yeah, I think that's more ideal. TLT, we know I think it's going to come down that bond auction. I would not press any longs on gold here, by the way. So gold rallied to a very, very tough level. Huge move, way oversized move. I think she chopped sideways for a bit. I am long GDX, but I'm long now through something called a time spread, which means I'm selling shorter term options. And I'm still long some longer term options, but I'm collecting premium like decay to get paid to hold that position while staying slightly directional on that. If you don't know, sorry, but it's a thing. Okay, so let's see. SPX flush, puts printing. With a chance it would be nice to identify what catalyst caused that flush. What catalyst caused that? I don't know. There wasn't really anything on the docket today. Let's just go to this week. Since 6-month auction, that's later. So there wasn't really anything. I don't even know what that is. NOPA crush. I don't know idea what that is. Some short-term bond auctions right now is the only thing I'm seeing that came out, but that was way earlier. Nothing on my calendar that would have caused that. Fair value gap fill on SPY. So the fair value gap fill on SPY was, let's see, way down here. So it's inside of Friday's range. Come on. On the right-hand side of my screen is the volume profile by visible range. And this is it, right? So this begins technically 427.36. Let me just make this a little bit bigger for you guys. Hopefully you can see that a little bit better. It's right here. So 427.36 down to 425. And I'm just pulling this order block right here. I need some drawings. So order block meaning like I can see on a 30-minute candlestick chart, this pop out to me pretty loud most of the time. So I use it. I can see pretty clearly where the bulls are stepping in here, 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 right? Defending. They got pushed around right here, but they defended again, right? So 422. I don't really, I think they still would defend at 422, but to me, I'm reading this as like people getting long, right? So, and that's just what the charts tell me. So people are getting long here below 425 down to 422.30. And what happens though is if they lose this level, if they were to lose this level, anybody that got long in this box, why it would be a flusher, all these people would be like insta stopped out, boom. And we'd be looking at 413, just like that. If they get flushed out because they just got long. And so they're not going to sustain, they're not going to hold for that long, right? Like if they're traders at least. But for now, like, look, this may not ever come to fruition, right? Like that may have been it. Last week, or not last week, 2 weeks ago, when I first was looking at this and I was like, I really want to get long here. Here's my problem, right? I missed all of this because I was actually looking for some of that retracement back to that 430 level and then back into this fair value. But I should have honestly just been going, right? Like we knew, hey, look, we're going higher. Right now, we just retested this level one more time. Should be a long, right? There was the session gap here, but for now, like we didn't even attempt to fill it in the first 30 minutes, at least on SPY or first hour. So it could continue a little bit, but it doesn't have a lot more upside to me, right? Because I'm not going to really get long. Like I'm absolutely not thinking shorts whatsoever over 430. It's just not going to happen, right? Like they come off the table. At this point, for right now, this is high risk short with a high reward possibility in terms of options. Futures, different story. Totally different deal. Dollar coming down, looking decent. And I think Shop and Adobe. Yeah, we can do this really quick. So if I'm going to look at different time frame or different stocks, I have this is my setup right now. Not right now, but that I'll usually look at. It's like 4 boxes. So both of these two things right now, I want to look at IGV. So Shop and Adobe are pretty heavy components of the software sector. CRM is, I believe, the largest component of the software sector. So I want to take a look at the sector itself first, see what kind of setup this looks like. This is bouncing around super consolidation on the 50-day and the 20. Little consolidation here on the weekly. Ooh, I do not like to trade these type of setups. If you're old school, depending on how old school you are, there's something called a box. Anyways, I forgot what this is called. Rectangle. I need to find it's a box, rotated, whatever. They call it like diamond consolidation. I think it looks like this, right? And this can fake you out real quickly. So be super cautious of these kind of setups. I'll just say that. So this is, to me, this is just pretty crystal clear consolidation. Depending on how you look at this, probably on a daily, it's gonna be split between bears and bulls, right? So you're gonna be like, oh, some people are gonna, oh, it's a flag. Some people will be like, oh, it's head and shoulders or cup and handle, or it's just pennant. To me, it's just consolidation, right? So like, I don't want to take a cue. It's not giving me a clean cue on this as that stands. It's very similar to SPY. And again, okay. So anyways, I'm not going to get a cue from the software sector. Ooh. Shop, on the other hand, is in a tough spot. So this could be consolidation, but the way this is setting up, this is going to get really spiky really fast. I think I was short shop and long shop twice last week, both ways. And this is totally typical. This is a 200-day. This red line is 200-day moving average. This can kind of go away. Where is it? I mean, that pop, a 50% retracement of this breakdown would be 60, just under 60. But this setup is very squeezy. This is tough. So all your moving averages are getting really tight. I would let them get a little bit tighter. If you want to trade this, this is a setup that's like, okay, open at the absolute close and then close at the open. So the setup right now looks like it could pop tomorrow in maybe a violent way, but only up to like 54, and then it immediately fades, if that makes sense. So I don't see any sustained rallies here based on this setup, but yeah, you could pop to like that 54, is that 54.73, maybe even up to 55, but exit stage left at that point, because this has got some more consolidation to go through. At the end of the day, what's true is here's your box, right? It's been chopping in this box for how long? 20 days. It's not that long for a lot of stocks. I would expect this to be your trading range for a week or so until you have some kind of, I'm going to look for earnings catalyst November 2nd. So maybe you get a pre-earnings pop, exit stage left for right now. And then after earnings, you'll have a clearer direction. But yeah, this looks like it could go a little bit higher. 56 maybe. We'll see. Adobe's a hard one. Adobe, it again, super similar. So I got long Adobe way in here. All of this stuff. I think we sent it literally at like 3 something over here. And it was like we bought just like in the after hours, just like, fuck, just got to grab this because it looks like it was like one of the last mega cap stocks that hadn't, like Microsoft, all of them had already made their recoveries. This guy was still down here like, oh no, this is going. But the problem is that we hit our target. I hit my target, right? Which is 575. So I would wait for this to really recover first before thinking about going extra long. In the meantime, this has got to be consolidation for a while, right? And so you would have to have some kind of fundamental change, right? So like, here's the box that Adobe's sitting in between 5 to 570. It's a decent range from a trading perspective. But again, Adobe is one of those where like you have crazy spreads on options. Put control 520. So if Adobe loses 520, that's going to be right where that 20 and 50-day moving average are. Then I would look, and I would expect to come down to somewhere around 450. Otherwise, upside 605, maybe 630, and then you're still, again, you're gonna deal with this like prior high area. What I'd say is like, this is if you're long, I'd stay long. I wouldn't get net new short here or net new long though. if that makes sense. It's a hard read. These could be consolidating for a while. Adobe is like one of those where like when it starts to move, it moves in pretty quick spurts, right? So like here, you're gonna know, right? So this is 30 days, 50%, right? This is, what is this? 45 days, 30%. So when it breaks a level, it's going to tell you and it's going to scream at you. It hasn't broken either level right now. So I would just wait, set maybe some level alerts, 574 to the upside, and then I would really say like 415 to the downside. I'd set an alert, 414 and change. And then if it breaks these levels, then yeah, it's gonna scream at you. But well, I don't need to be playing with it before then. That makes sense. Can you look at Google? Yeah, I do. So Google, I want to look at. So two, I want to do for you guys, and then I'll pretty much call it here. So let me just make this a little bit cleaner, and I'm going to take some of these lines off right now. So Google, pretty heavy uptrend, right? So here's your channel up. Let me see. So these are all prior lines, broken. Oh yeah, this is when we went long. So I am long the stock, but but again, right into a very difficult level. And there was technically a session gap at 140.38 that we did fill. And that was one of my later targets on this guy. That said, it's not breaking down per se. So remember, stocks either they're running or they're resting, right? They're not always making giant moves. This has had a pretty big move. And we do have earnings coming up end of the month, so about a week out. Super tough one. If you get a pullback below this prior, kind of like 137 area, it's number one, it's defending here, right? 136.61. So if you break that low, then yeah, I think that you'd have to get pretty short term here and trade toward the bottom of this channel, not a breakdown of the whole thing, but just to the bottom of that channel, which is going to take you to about like 133, give or take, and then stop, right? Because a new trade might come from there. You never know. So that would look like this kind of breakdown, something like that. But I don't want to get stuck in something that goes straight like that, which is very, very possible without this completely going out of that channel. And so usually like what I'm looking for, if Casey was here, we would be talking about Volley Dolphins, right? I'd be looking for some kind of basing like this to really take an actual short on this guy, which means that it would need to extend sideways, chop sideways for like a week or two, which does set this up for more of a post earnings move. So I don't have a major trigger here one way or the other on Google, but it could have a pre-earnings type of move. It's just not something that I'm really looking for like epic swings on. Oops. Let me get this back out. So again, just kind of like connecting these more or less recent lows here. As for now, it's still holding trend. Like I said, I want to see it. I'd want to see it like base and then come down. So it's not quite ready. Otherwise, I could just be looking at, some shenanigans. And this is definitely going to be an earnings move. I don't think it makes a big move in one way or the other. Ahead of that, there's no reason for anybody who's been long. I think a lot of people got long around here to step in front of it like heavily. And this was the other one. So NVIDIA, I haven't even looked at it. So NVIDIA is different. NVIDIA does have earnings. NVIDIA, to me, is in heavy supply mode. If you watch my timeline and stuff, the semi sector as a whole, to me, also in distribution. So still not out of distribution. So here's the difference. So here's the semiconductor ETF. Remember, I'm looking for the breakdown of this trend line and then a retest and then go short. So got up trade here. That's great. Was looking for early short, didn't go down. But here we are locking in another lower high. So lower possible. So nothing's locked in, but it is definitively a lower high from last week below this trend line. And here's your kind of like real consolidation. So this is still to me in distribution in general, right? And I think if I was like with some other traders like FS and them, distribution stuff like this is Wyckoff distribution to me. It can play out like it takes a long time for this to play out. It's not something I'm trading for right away. But with NVIDIA, it's similar. Although I think I have something that could easily go. So today, 50-day did save it. I'm looking for that 50-day to fail, really. So sometimes we'll get this little pop rejection below. Here's the difference. NVIDIA. Boom. So versus the semi sector as a whole, let me get some of these lines off. Versus semi sector as a whole, this is a different view, right? So to me, that little top right there was that tag after breaking this downtrend or this uptrend was that tag that we're looking for to go short. I did catch this short Friday. I just didn't ride it all the way. Anyway, you slice this, even if you were to come down here and be like, oh, okay, here would be your last kind of like line of support. We could do it this way. Just do like a quick parallel channel. All right. Oh, this is not lined up. Anyways, here's it would be a real breakdown. So to me, we're at a spot where I could take this. I don't want to finagle with these too much and make it like, this is what TA, you can fudge a line to make it say whatever you want it to say. But I'm really just looking at this as a possible entry shorter term time frame, right? Here's really where my stop would be. So this is kind of like, here's our broken structure. Today I was looking at essentially this of a 50% retracement of Friday. 618 was here. So basically the high of the day is going to be my stop short term. And I could see this as a swing setup pretty easily if this does continue down. But I don't want to hold it much longer than that because it could fill this kind of level here, 465. And it is possible, right? Like that this goes up to here also. So that's my stop right there, 465. I think it was. And let's see. It was mostly Friday selling, dip buys today. I'm not going to give up on this one as of yet. Yeah. And this is a hard stop, right? Anything over, 465 is too generous, right? Anything over 463.30 would be a hard stop. There. Dish being down. I don't trade Dish, man. I'm sorry. I think that's it, you guys. If you have any other questions, comments, concerns, confessions, it's all good. This week here, the thing, we got a handful of earnings stuff. Tesla, no, I'm not trading. Boeing, I am still short. We'll see. If it doesn't break down today, I will close this short. If you see this kind of setup also, by the way, here's what one to note. If we don't make a new low on Boeing, and I am short Boeing, this is getting closed out today because I know it's going to need to go higher in order for it to go lower. Worst case, right? Roblox, I had a short on earlier. I'll probably close the rest of this. It's small gains, nothing crazy. Again, right in that software IWM type sector. And man, Bitcoin ETF being fake news. If you caught the short out of the gate on coin, congrats. I did not catch that one, but I can only imagine that would have been an amazing trade. But we'll see. I think that's it for now. Yeah, choppy chop. Tough call. Where'd Miss Cleo go? Miss Cleo says, recap, right? Tuesday chop, and then rest. Possible pivot Wednesday. We'll see how good she does this week. Yep, I'll see you on Spaces. Actually, I'll probably hop in some Spaces later today too. Actually, I will be on Spaces with Wolf tonight. We always do like a meta. Yeah, I can do it meta. We always do like a Monday stock pick space. Meta, I'm probably gonna close. This one was a pullback retest. We got earnings coming end of October. My maximum, I don't know, this might be one to be a better entry tomorrow. We'll see. What time is it? I still got like 2 hours of trade. Gotta see how the close is. I would probably close right now though. I hate closing here. If I close here, it was just chop. 322 is a better entry. So it's like, why would I close 50 cents away from my stop? I don't know. I'll just chill for a bit and see how it goes. Yes, flattening out. We'll see. All of these, my two, like, and a crowd. How's crowd doing? Crowd base. I definitely like this one better. Short. But it's all going to come down to the close right now. And what is JP Morgan? I'm going to probably be more like time spreads today or this week, just based on, earnings, number one. JP Morgan, I think it bases right around 145. So that's a tradable setup for a spread trader. Not necessarily for a directional trader, though. All right, guys. Cool. Appreciate you, Ryan. Awesome. Adios. And I will see you guys on the next one.